Good afternoon and welcome to the Huddle Group PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to CEO Martin Higginson. Good afternoon to you, sir.
Yeah, good afternoon. So I'd like to just give a sort of short presentation on the H1 results and also talk a little bit about quarter three performance and where we're up to in terms of the business sort of evolution. So just by way of a bit of sort of history on who we are and to give people, any newcomers, some bit of context. We've been doing this a long time. We've set up a number of businesses over our business life. We've had numerous startups in total. We've set up a lot of businesses. We've had 6 that have gone through to IPO, and there's been a lot of sort of exits as well along the way. So we'd like to think that we have a reasonable level of experience in terms of growing businesses and delivering them through to whether it be an IPO or an exit. Huddled. Let's just talk a little bit about Huddled and what it is. It's a collection of sort of direct to consumer e-commerce businesses. We're really focused on turning surplus stock into cash, and we see there's a big opportunity there. More and more companies are recognizing their sort of ESG footprint, and in many ways we're helping them solve some of those problems whilst also delivering value to consumers. So our aim really is to reduce surplus stock going to waste. We're in the process of educating manufacturers, and we're doing more and more of that as we grow. And that's all underpinned by a large audience of savvy shoppers. And we'll talk a little bit as we get into the presentation about how we've grown not only Discount Dragon, but some of the acquisitions that we've made along the way. So the opportunity, what is it? Well, just to sort of context, put all this into some sort of context, 10 million tons of food is wasted each year in the UK, annual cost of about £19 billion. And it's no different in the cosmetics world. There's 3.5 billion of annual cost of stuff that is wasted. And a lot of this is not stuff that is used by date. And I think it's very important that we differentiate best before date and use by dates. And if you think of best before dates, I think that's things that sort of sit in your cupboard, and use by dates are stuff that sits in your fridge. So what Discount Dragon sells is stuff that sits in your cupboard rather than stuff that sits in your fridge, to sort of put it into some form of context. A lot of this will be tin goods. So a lot of it will come up close to its best before date. It may have 2 or 3 months left on it. But most supermarkets will not accept goods that have only got 2 or 3 months of best before date. So what do you do with these goods? And historically, a lot of this got thrown away. It got put into landfill. Often it went out into wholesalers and then ended up on market stalls. There's also an opportunity where stuff becomes mispackaged. So there may be a change in packaging, maybe a redesign in a can. And what happens is the marketeers will then decide that anything that is the old packaging should be wasted and not used. So there's an opportunity there. And I think more and more now we're seeing manufacturers have less warehousing. They're all running a just-in-time supply chain. So if there is an oversupply, or a supermarket decides that it doesn't want something, or it has a hot summer where chocolate doesn't sell, there is a lot of surplus stock. And then you've got things like branding changes. So whether it be food, whether it be cosmetics, the amount of surplus stock is huge. It's not going away. It's as warehousing becomes tighter and people run sort of stricter sort of supply chains, there is more surplus stock in the market. And that is a massive opportunity for us in all of these businesses. So I'll talk a little bit later about the opportunities and how it actually impacts each of the businesses. But just sort of going back to sort of the H1 performance and where we've come from and where we are today. So we've continued to grow. When Discount Dragon started, and it's only less than 2 years old, it was doing less than sort of £75,000 a month. So, I'm very pleased that we report over £5 million in sales. A large chunk of that has come from Discount Dragon, that's now doing, regularly over £1 million a month. So, great performance from that business. Revenue's up 61% in the year to 4.9 million for the sort of half-year period, which is, I think, testament to the team. We acquired NutriCircle earlier this year, and again, we've started to see really solid growth on that business. H1 revenue 349,000, and as we move into quarter three, September will be the best month that the business has done to date, and already we can sort of see that this month should do about £225,000. So it shows the growth trajectory. But I think what's equally as important on NutriCircle is that at the moment we're having to throttle it back. We literally can't cope with the demand. We're having to sort of throttle back the emails that we're sending out because we just can't sort of process all the orders in time. Now, in order to solve that problem, what we're going to do is we're going to move that business into our fulfillment centre in Leigh a little bit earlier than the January we expected. So as of sort of mid-October, that will move in its entirety to Leigh, and we'll start fulfilling it from that centre. So that will allow us to then continue doing more emails and open the floodgates and start growing that business. So we can really sort of see that not only have we made continued progress over the half year, we continue to make progress as we go into sort of quarter three, and we can now start seeing the synergies that will come out of this as we go into sort of quarter four and beyond. So the portfolio, we set right at the outset, we said we wanted a group of e-commerce businesses that could operate, as a group with all the synergies that come with that. And we acquired Food Circle Supermarket, which we've rebranded NutriCircle, and I'll talk about why we've done that in a couple of slides. And then recently we acquired a business, or the controlling stake of a business called Beauty Limited. And that launched on September 12th, only a couple of weeks ago. And already we're seeing fantastic growth, both in terms of visitors to the site and revenue that is being generated from that business. So what we're really about is investing for growth. And we've had a sustained period of investment in the business. We continue to invest. It is really important that we invest not only for today, but for tomorrow and beyond. We've put a lot of money into stock, and you'll see that our stock numbers have actually risen substantially. We're probably at sort of 1.9 million of stock in the business now, which we think is really important as we go into the busier sort of quarter four period. We've put a lot of investment in alcohol, which again we think is right for the Christmas period. But also we've been very opportunistic in our buying. We were able to buy a lot of product at the right price, which helps us increase margins. We continue to invest in people. We think people are, they're the backbone of our business, whether it be marketing, operations, fulfillment, whatever it may be, the people are what make this business. And as we've talked about before in the previous statements, we want to invest in the warehouse facility. We need to improve capacity. We've secured an extra sort of 40,000 square feet in the building that we're in. We'll be fully operational in there as of January, February next year. We're busy building racking and getting all of that sorted out, which will actually help us drive synergies from the business and synergies from the group, whether it be marketing, whether it be finance, whether it be operations and fulfillment. All of these synergies will start flowing to the bottom line as we move forward. So let's talk a little bit about the growth pillars, what actually makes up HUDDLED, and why do we think these pillars are sort of the foundations of success. So it really starts on the left-hand side at the top corner with stock investment. We need good stock. And this then goes back to surplus stock and oversupply. Because if we can actually provide a solution to these manufacturers, then we can buy the stock at the right price. And in buying it at the right price, we can actually sell it on, make very good margins, but still offer the consumer a huge discount on the RRP. So it becomes a real win-win. The manufacturer isn't throwing it to waste. They're getting some cash back for these goods, but we're able to then offer it to the consumer at a significant discount. And in some instances, and we'll talk a little bit about the sort of cosmetics business, that will allow people to sample products that may have been outside of their price range. They may have wanted something but not been able to afford it, wanted to sample it. So we can actually give people a way of sort of testing those goods and actually rescuing them from waste. That then leads on to marketing investment. And the marketing is as much about sort of educating people about what we're doing, and about the value proposition, about the discounts. And often you'll see things on Facebook, and I think Facebook it's a great advertising platform, but for many, things can often look too good to be true. So what we've started to do in our sort of marketing strategy is we now look at this as a waterfall, and you'll see, and we'll play a little bit later on our TV advert. So what we're trying to do is look at the waterfall and sort of say, if we have TV at the top and then radio and then things like Meta, Facebook and Instagram and TikTok and all the rest of it further down, what the TV does is it underpins the trust value. And things like Trustpilot are, again, another sort of trust icon that make people feel comfortable in buying from us. And I think all e-commerce sites suffer from this. They've got to build trust. And the more trust we build, the more repeat customers we get. And that is really testament to this business. This is about investing in acquiring new customers, but also building the trust. And part of that trust then comes about through faster delivery. The quicker we get your goods to you, the more you trust us. And people like Amazon have set that's the drumbeat by which we must all now march. So therefore, people expect fast delivery, and we need to adhere to those disciplines. So the warehouse investment is absolutely vital. Adding the additional 40,000 square foot is going to be mission critical to us. It will give us about 90,000 square foot of warehouse space. It will allow us to operate 24/7, and it will allow us to process more goods more efficiently and get them out to the consumer in a timely manner. And the quicker we get stuff out, the quicker they buy, especially in things like food circles, supermarket, or Nutri-Circle as it now is. The faster we get those protein bars to people, the quicker they buy again. So this becomes a sort of, this virtuous circle where, one leads onto the other. Obviously, we start to get economies of scale, and we're starting to see that now. We'll start to see that more and more as we get into the centralized warehouse and everything operates from one location. And that will ultimately, all of these things, faster we get things, leads to better conversion and retention. And ultimately, the bigger we grow, allows us to increase margins. So what are the brands that we've got? Well, we talked about this right at the top of the slide deck. We now have 3 brands. Discount Dragon. We've rebranded Food Circle Supermarket into Nutri-Circle, which we think is much more apt. And obviously we've got Boop Beauty. Discount Dragon, the flagship, the first one that we had. I'm just going to play a short video now, which is our TV advert. It's only 30 seconds long, but for those that haven't seen it, it'll just give you a flavour of what we're investing in and where we're trying to go with the business.
Discount Dragon deliver big brands at amazing prices, with new deals added daily. With savings on designer fragrance, sweet treats, snacks and drinks, cupboard essentials, cleaning products, and brand name favourites for all the family. Even him. Plus, with our deal of the day, save even more with extra discounts off your favourite brands. But hurry, because when they're gone, they're gone. Save online every day at discountdragon.co.uk.
So let's just talk about Discount Dragon specifically. And again, let's just recap on the opportunity. We talked about surplus stock earlier on. Surplus stock is a massive opportunity for us. It gives us an opportunity to buy products at the right price. And we're seeing more and more of that now. We've done a number of deals where, we've managed to rescue stuff from waste. People have got ESG policies. They don't want stuff going to waste. This allows us to buy it and offer whether it be tin goods, whether it be alcohol, whether even it be perfumes or sunglasses or other items. Our job is to not only stop this going from waste to waste, but to allow the consumer to buy it at the right price. And in doing all of this, we need to educate the audience. We need to educate the audience on the value proposition and why we can offer you goods at this price. And we're starting to do more and more of that. And one of the things we recently did is we looked at consumer feedback, and this is about building the trust. And one of the comments that we got was, I don't really want to be spending 30 quid. I don't want to be forced to have to spend 30 pounds as a minimum threshold. So we actually took the brave decision to remove that back in August of this year. And a lot of people will say, that's crazy. Why did you do it? We looked at what was happening on NutriCircle, where there wasn't a minimum threshold. We were encouraged by the way the consumers were interacting with that. So we felt the decision was the right one. What's really interesting is, since removing it in August, our average order value has actually increased every single month from from July. Then on August we improved again, and in September we improved again. So September at the moment we're running circa about £41 of AOV, which is a significant improvement on where we were in the first half of the year. So actually, in doing that brave decision, we've actually managed to improve AOV, which is a big KPI for us. And also what's also happened is we've managed to improve basket margin, because we're really now focused, rather than focusing on just a massive daily deal or a loss leader, we're now about value across the entire proposition. And that was something that we altered in August and then refined in September. And in doing that, we've managed to increase our basket margins. So all in all, we're moving in the right direction. And I feel that in doing these things, we actually build further trust. And building more trust builds better retention. In August, we had 74% to be precise, returning customers actually came and bought from us. So that really underpinned our whole acquisition and retention strategy, that we had that level of returning customers. And a lot of this is built by, again, comes back to trust, speedy delivery direct to your door. We now deliver anywhere in the UK. So we use the Royal Mail to deliver for us. That allows us to deliver to the Highlands, Islands, and any part of all the remote areas of the UK, which a lot of carriers charge extra for. That's all now included. So just in doing that, it's allowed us to sort of increase awareness and stop customers in those remote areas having to pay extra for it. So all in all, we think we're delivering really a sort of sustainable solution for manufacturers, less waste, but also we're building trust with consumers that is driving retention and driving repeat purchases from consumers, as underpinned by our August numbers of 74% returning customers. So all in all, we're going in the right direction. AOV is going up, margins going up. We scaled back advertising in July and August while we refined our website, because we wanted to improve the user experience. And the TV advert that you saw earlier, we've just literally, as of the 23rd of September, been running that on some national TV days as well as some regional TV days. So with the improved user experience, better website, removing the minimum threshold, we're now starting to see things really tick up, and we're very encouraged by the performance over the last week or so. So just talking about the numbers to date, and really, you know, the H1 numbers. So let's just look at Q4 2023, 1.8 million of revenue. And if we then look at Q2 for this year, 2.8 million, an additional £1 million of revenue has been added if you just compare those two quarters. So order numbers, Q4 last year, 48,000, Q2 this year, 74,000. And then new customer numbers you'll see at sort of 20,000. And the Q2 numbers, as I said, we did less marketing in July and August while we refined things, so we didn't acquire as many new customers. But all of that starts driving towards getting more repeat customers and better quality customers. So we'll start to scale that up as we go into Q3 of this year. So NutriCircle, as people are aware, we acquired the business Food Circle Supermarket. We really wanted to rebrand the business. When the guys set up the business, they were looking to do a lot broader church in terms of their offering. Due to cash constraints, they focused in on the protein market and really hit on an area that was delivering for them and delivering good repeat customers. So we felt that it was only right that we rebranded the business and made it focus very much on the sort of the area that of protein bars, healthy living that they were focused on. So again, the opportunities are very similar, not much different from Discount Dragon, and underpins the sort of whole sort of huddled ethos. With a strengthened balance sheet that they now had with being part of the Huddled family, it allowed them to buy more stock. With the rebrand, it allowed them to have a focused business. And I think with their loyal customer base, excellent retention, it really allowed us to sort of hone in on that. As we touched on earlier, at the moment, they are sort of over trading, if you will. The demand is greater than they can fulfill. So how do we fix that? Well, we're going to move their fulfillment centre to Leigh in the northwest of England. That will be done by the second week of October. That will then allow them to open the floodgates and continue the marketing. We've seen revenues grow steadily. When we bought the business, it was doing just over £100,000 a month. This month, it will do circa £225,000. So you can see the move in terms of revenue growth. And we can see that just continuing to tick up. We've got the marketing sorted out. We know what we're doing. The customers are very loyal. So we're very confident in our ability to be able to grow this business. The move to Leigh into one centralised fulfilment centre will allow us to put all of the fulfilment through the Royal Mail. At the moment, they're using multiple carriers, which means that all the customers in remote areas are having to pay, up to £8-9 additional postal and packaging to get it delivered. That will all disappear once we move to the Royal Mail. So we'll be able to deliver to anywhere in the UK. And when we did that on Discount Dragon, we saw a few percentage points overall increase in revenues. So we're expecting the same in NutriCircle. And again, the more goods we stop going to waste for them, the more we offer a sustainable solution for manufacturers. And the more we're able to buy, the more we're able to buy at the right price. In this business, we've moved up. We've gone from buying from wholesalers to actually buying from manufacturers. And that's allowed us to take a few sort of percentage points out of the costs, which ultimately flow straight to the bottom line. So good margins, good AOV in this business, and an amazing repeat customer base. We now just need to get the synergies from the centralised operations going, and then we can really open the floodgates on this. So let's just talk about the numbers. Revenues in H1, £349,000. Quarter three, you can already, we will be sort of 550. We're expected to exceed 550k. AOV is good. We're around sort of 36 quid. So we're not expecting that to grow materially, but what we are expecting is just that sort of repeat customers. So what we want to increase is the returning customer levels, which already is good at sort of 52%, but we think we can get that up even further. And it's at 52% because we've had a sort of relatively aggressive acquisition strategy of new customers. And new customers spend slightly less for their first purchase, because again, it gets back to that whole trust element. So we know new customers are spending slightly less than repeat customers. So, the more that percentage of repeat customers goes up, then actually your AOV as a blend will go up accordingly. So the business moved into operational profitability in September, and we said in the last statement that we wanted all the businesses to be operationally profitable by the end of this year. So this is the first one that's done that, and we see that continuing. We see with the continued growth and the synergies that is very achievable. And now it's about doing that across other parts of the business. So Boop Beauty, we acquired Boop earlier this year. We set about not only improving the website and investing a lot of time, money, and effort in improving the website, but also improving the stock. And this gets back to the pillars of success that we talk about. You've got to have great stock in order to be able to market. Without the stock, it's a waste of time. So we've invested heavily in stock in this business. And we've managed to get some really, really good products that are instantly recognizable. And I think this all boils down to what the original founder, Yasmin, did. And she identified that there was a huge opportunity in the beauty industry. Over £3 billion worth of beauty products go to waste each year, nearly all of which are fit for use. So that alone just is an incredible number. And it also feels fundamentally wrong that you've got all of this stuff going to waste. You can understand it for a lot of big brands that they don't want to sell things cheaply because they feel it undermines their value proposition. What we've set about is educating manufacturers that actually it's not about them wasting these products. It's about us rescuing these products. It's about users having the opportunity to be able to buy these in a limited quantity. So what Beauty's been able to do is educate manufacturers, tell them this is limited quantities. The consumer then can get goods at up to 80% off the retail price. So not all goods will be there at 80%. Some goods will be up to that. Some goods will be 30, 40, 50% saving. But it will be a significant saving for the consumer. And again, this gets back to sort of the education and how we do that. So when we launched on September 12th, we started to do some Meta ads, some Facebook ads. We started to see sales. We were very encouraged by the level of traffic that we were getting to the site. That actually shocked us in terms of what we were getting and the volume of eyeballs. What we then needed to do was start building awareness and trust in the brand, because as I touched on earlier, it's very easy for people when they see stuff on Facebook to assume that if it's 80% off, then it could be a scam, and then they're going to enter into something where they may not get their goods. What we're now starting to do is work with people like Trustpilot, and we're starting to build that reputation. And that will take a few months, maybe even less than that. We're already starting to see the benefit of that. And the interesting thing with Boot Beauty is the viral aspect of this is actually off the scale, much more than anything else. Obviously, we get a little bit of it with Discount Dragon, but nobody's going to brag about saving money on a bottle of tomato ketchup. Whereas what we're finding is people are really talking about saving money on cosmetics. And we've started to see a real upsurge in not only traffic volume, but also revenue. So in the few days that we've really been going, we're very, very pleased with this. We will see revenues definitely over sort of £20,000 this month. But more encouragingly, we've seen revenues increase sharply in the last few days. Traffic levels are very, very encouraging. And we think as we start to educate the user about the product and more people get the product and are happy with the delivery, then this business will only continue to grow. And we're actually offering a sustainable solution for the beauty industry. And I think, again, the more we educate the beauty industry about not wasting goods, the more this business will increase. So I think a great business. We, as you see on the list there, you've got some great brands. Some of you will recognise those, some of you may not. But trust me, if there's sort of females in your house, then they will recognise those brands. We won the Marie Claire Sustainable Business Award only a few weeks ago. So that again underpins confidence for manufacturers that we're doing the right thing, and also for consumers that they can buy with confidence. So all in all, early revenue is really, really encouraging. Site traffic is really encouraging. So we've got great hopes for this business, great team working on it, and I think great things can happen here. So sort of a little bit of an outlier against what we've just been discussing. Let's explore. We agreed to hand over day-to-day operations some months ago to Wicked Vision. They've done a great job. QVC orders for 2024 will be about 25,000 units of the Zodiac headset, so that's a good number. And let's explore ocean, space, and wildlife. We've got about 12,000 units left of that product, which we expect to sell through via Amazon and direct to consumer in the final quarter of this year. And that's actually started now. So we're fairly confident that the majority, if not all of those, will sell through. That in turn will allow this business to repay debt of about £400,000, which will inflow back into the business. So nice cash coming back into HUDDLED, which will sort of underpin our cash position and underpin what we're doing as we move forward. And when they do that, it will then move to a sort of 50-50 ownership. So it's a very much hands-off approach in terms of our day-to-day management, but a welcome sort of inflow of cash, certainly early next year, adding that sort of £400,000 or £500,000 will be welcomed and just underpin our balance sheet even further. So what's the focus as we move forward into quarter four and beyond? Well, back to these sort of investment pillars, stock is really, really important to us, and in being able to buy more stock, we've been able to buy that at the right price. So it really is underpinning that foundation stone in that getting good stock, getting it at the right price, improves margin. Increasing awareness and trust. The more we build trust, the more we get returning customers. So whether it be TV, radio, Meta, Google, affiliates, we're right across the piece. So the more people see us, the more people recognize us, the more people will trust us. Move everything into a centralized warehouse, get your goods there quicker, then that again underpins trust. But more importantly, or as importantly, it helps drive synergies. So it helps drive, whether it be the raw mail, whether it be packaging, processing, it all helps in terms of driving bottom line efficiencies. Improve UX functionality, so user experience functionality. It's important when you go on a website that the navigation is really good, the checkout is really good, it's seamless. So we're spending a lot of time and money investing in improving the UX functionality. And why do we do this? Well, improving the UX functionality will actually improve the conversion rate. And if you improve the conversion rate by only a few fractions of a percent, it actually improves the profitability of the business by many percentage points. So to give you an example, if we have 10,000 visitors to a website in a day and we get 1% conversion, if we can get 2% conversion from the same ad spend, then we've actually reduced our cost to acquire a customer by half, and we've doubled our revenue and traffic for no additional spend. So it is very, very important part of the business. All of these things combined will help us move all of the businesses into operational profitability. And you can already see that with NutriCircle, what we've done there. It's not running at full speed by any stretch of the imagination. We move it to the centralized warehouse, that will start to turbocharge. We're already starting to see with Discount Dragon the impact that we've had, not only in reducing or removing the minimum spend, £30 spend, but in improving the user experience, the UX functionality, and in improving our awareness on TV and radio, and getting goods out quicker. So we're just starting to sort of see that tick up, and we've had great growth. Let's remember we've gone from when this business first started, £75,000 a month to over £1 million a month in under 2 years. So we've already seen great growth from this business, and now it's about really just eking out further growth and more profitability. So why would you invest in this business if you were just looking at it? Well, we firmly believe that we are innovating for success. The ESG challenge is not going to go away. We've got to solve the waste problem. More and more manufacturers are running just-in-time facilities. The problem is huge. So turning waste into opportunity and into cash is I think a good thing. And it's a good thing for consumers. They can buy stuff cheaper. It's a good thing for manufacturers. And ultimately, it's going to be a good thing for us because if we can bridge that gap, then we will have a profitable and sustainable business. Building the strong brands, the more recognisable the brands become, the more you trust them, the more we deliver on time. And I keep going on about this, but it is really, really important, because that helps build retention. And the longer a customer stays with us, then the more we can afford to pay to acquire that customer. So there's two things that matter really in my world. One's the cost to acquire a customer, the CPA, the cost per acquisition, and the other is the lifetime value. And then in the middle of that, you've got average revenue per user, so you've got ARPU in the middle. But if we've got good lifetime values, then it means we've got a very sustainable business that is highly scalable. Moving everything into a centralized warehouse gives us strong operational gearing, centralized finance, centralized marketing, centralized UX improvements. All of these things can be shared across the whole group. So what we learn on one website, we can then transfer to the other. And I'd like to think we've got a solid management team. Certainly, the teams that we've got in each of these businesses are amazing. Their energy and their drive to succeed is off the scale. So I'm, absolutely proud to be part of that team. And I think we've got a proven track record. We know how to bring these guys together. We know how to really get the synergies driving from these businesses. And I think all in all, that combination will lead to a very successful business in the months and years ahead. So thank you very much for sort of listening to the presentation. That concludes the presentation, and obviously we'll take questions in a few minutes.
Martin, thank you very much for your presentation. What I'll do is I'll just bring your camera up for the Q&A, if that's all right. Ladies and gentlemen, please do continue to submit your questions. You can do that just by using the Q&A tab, which is situated on the top right-hand corner of your screen. We have received questions throughout today's presentation, and I'll start off with the first one here, which reads as follows. You've talked about investing in the period for growth. What have you used the cash to invest in, and how much cash have you invested in stock?
Okay, well, we did actually sort of touch a little bit about this on the presentation, but just to reaffirm that there are three building blocks for us. First of all, stock, and we now sit with 1,400 SKUs in Discount Dragon, multiple SKUs in NutriCircle and Boop. We've got approaching £2 million of cash invested in stock. So yes, we've invested a lot of money in that. We've also invested in the warehouse, and we've invested in marketing. So we produced the TV advert, not cheap, but we can see that that's certainly bringing in the numbers and yielding success. And I think more importantly, we've made that investment now. So now it's about reaping the rewards of those investments, including the warehouse, including all of the goods in staff, the goods out staff that we've invested in, the whole marketing teams. We've really reinforced this to start leveraging the operational gearing of that investment as we move forward into sort of Q4 and beyond.
Thank you very much, Martin. Turning to the next question. Do you expect the level of investment to continue into the next period?
No, definitely not. Look, we said this was about the building blocks. We've invested in the stock. We've now got a large level of stock. We've got all the people in place. Yes, there will be additional pickers and packers, but these are small numbers in terms of the investment sort of thesis. So no, this is now about growing the business and delivering the profitability that we spoke about.
Thank you very much. You've mentioned NutriCircle is profitable on a monthly basis, and Boop Beauty has only just launched. When do you expect Discount Dragon to move into profitability?
Well, look, Discount Dragon has grown rapidly. We've had 2 weeks of profitability in the business in September. So the last 2 weeks we've been there. Are we going to achieve that every week, week in, week out? We'd like to think so. We've certainly seen great improvements from the UX changes that we made. We've seen great improvements in reducing or removing the minimum spend threshold. AOV's up, margins are up. That's allowed us to buy deeper with some sort of manufacturers, which has improved margin. So look, we're very happy with the way we're going and the direction the business is heading.
Perfect. Thank you very much. Next question here. What is the cash run of the company, and when do you expect to need to raise funds again?
I'll let Dan, the finance director, answer that one, if I may.
Yeah, no problem. Yeah, so the short answer is we don't expect to need to raise any further cash for the business. I think there's Martin's alluded to, we've invested a lot in things such as stock. We've got a lot of stock now we're holding, in particular in the recent months, following the NutriCircle acquisition. We've sort of added a lot of stock to grow that business. We've bought a lot of stock to support the Boop relaunch, so cash has been tied up in that. And also, as we've touched on, the sort of losses monthly are narrowing. So, all in all, we feel we've got enough cash to be going. We're also expecting a cash return from our Let's Explore business in the coming months, following the sort of Q4 sales of the Let's Explore and Vodiac products. So there's no plans to raise any cash.
That's great. Thank you, Dan. The next question is around customer retention and asks, how do you plan to improve customer retention rates across the brands in the group?
Look, I think a lot of this goes back to trust. We've already seen the levels in Discount Dragon improve. August was 74.4% customer retention, i.e. customers coming back that had bought from us previously. In NutriCircle, that was at 52%, but that was because we'd spent a lot of money acquiring new customers. So obviously it's going to be sort of slightly lower as a percentage of the whole piece. But you can clearly see that revenues are increasing. When we started Discount Dragon, £75,000 a month. Now we're at £1 million a month. We've purposefully not spent that much money on marketing in August and the first half of September, as we made the UX changes, made the changes to the sort of threshold spend. We wanted to really analyze what was going on. We've seen that. We've now started gearing up again. We've talked about the profitability as we move into the end of September. So this is about, for me, it's about the trust that we're building in this business. The better the stock, i.e. 1,400 SKUs, the more likely you are to come back. The quicker we deliver, the quicker we enforce the sort of the brand values in terms of wider advertising and marketing. It all leads to better retention and ultimately better margins.
Thank you, Martin. Next question here. Revenue growth and new customer numbers appear to have slowed in Q3. Can you explain why this is, and do you expect this to be a one-off?
Well, yeah, look, as I touched on before, this was by design, not by default. We tested marketing in the first week of August on terms of TV marketing. We took the learnings from that and reacted quickly. So we wanted to see what was happening with the customer, the spend thresholds. We were getting feedback that people wanted that removing. We removed it. We broadened the base, so we've got 1,400 SKUs, all offering great value now. And as a consequence, we've been able to start scaling that up. So yes, we see it as a one-off. Yes, we see that as the right thing to be doing. But let's remember, even in the holiday periods, we've still delivered growth. July and August were still there. We slowed advertising down, but we still delivered growth quarter on quarter.
That's great. Thank you, Martin. And moving from Q3 to Q4, the next question is, what's your hopes for Q4? Do you expect record numbers?
Well, look, I can't get into forecasting, but the quick answer to that is yes, we expect further growth, and yes, we're looking forward to improved numbers.
Thank you very much. And the final question we've got in at the minute is there a risk that the large brands who supply you become concerned about the competition and loss of business?
I think you've got to go back to the opportunity here. £19 billion of food is wasted each year. £3.5 billion of cosmetics are wasted each year. So, that's 22, 23 billion pounds of stuff goes to waste. So yes, we'd like to make a dent, but I think that, are they going to lose all that business? No, we're not going to do 23 billion pounds of revenue next year. So I think the problem is still going to be there, and we're going to be there to solve that problem. And the ESG issues are not going to go away. We've just got to keep solving it and keep working with those manufacturers to deliver a solution.
That's great. Martin, Dan, thank you very much for answering those questions from investors. Of course, the company can review all the questions submitted today, and we will publish those responses out on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to you both, Martin, could I just ask you for a few closing comments?
Look, first of all, thanks everybody for spending time to listen to us for the best part of an hour. talking about the business. Obviously, we're very passionate about this business, so it's very easy for us to talk about it. But I appreciate that you giving up your time. So thanks very much. And if you do decide to invest, we welcome you. And we really want you as part of the Huddle family.
That's great, and thank you once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Huddle Group PLC, we'd like to thank you for attending today's presentation, and good evening to you all.